Comair's full-year headline earnings per share plummeted by 76% to 3.8 cents. That as jet fuel prices soared over the period. Revenue increased 16% to 4.1 billion rand. Erik Venter is CEO of Comair and he's on the line. Hi, Erik.
Hi, good evening.
My response is, phew, because I remember the first half results, there was a loss, and that was your first loss in 67 years. We were all waiting for the full year numbers to see if you could maintain your 67-year record of profitability. You managed.
We managed. I must say it's the first time that I've been relieved to see such a small profit. But it's, getting over the finishing line was the big issue.
But it came at great effort because you froze staffing costs, for instance, and made sure you had your in-house catering, although I'm sure there was a lot of planning that went into that element.
Yes.
Yeah.
There was a lot of cost-saving initiatives in the background. Obviously, these things take time to implement. So even though a lot of them were initiated at the beginning of the year, it took a while to implement, like the catering. And by the second half, a lot of them started to take effect. And we managed to cut about 80 million rand off controllable costs. So that did help. But the biggest issue really was to get the airfares up to a level where they were covering the fuel cost. And because there was such a massive increase in the rate of the fuel price increase in May, June of last year, it did take a while to acclimatize the market to the higher airfares. And, that's what took us so long to recover.
Where?
Erik, you know the old saying by Richard Branson, how do you make a small fortune?
Yes, I know it very well.
Yeah, I'm sure you know it very well. But what's the competitive advantage other than price? In other words, can any participant in a very much commoditized industry actually make a niche for themselves where they can get a sustainable advantage over their competitors other than price?
I think it is very difficult because you really need to get onto an investment cycle in this industry. It's quite capital intensive. You need to have the most efficient aircraft in the business. That wasn't the case when the fuel was only at sort of 4 rand a litre. But today, if you don't have the most efficient aircraft, you're just not going to keep up with the cost escalations. There's a lot of opportunity that comes with the leading edge IT systems, the most efficient pricing mechanisms, etc. But the problem is you first got to have the balance sheet to get onto that investment cycle. And so what typically happens is with the startup carriers, they don't have a strong enough balance sheet. They can't afford to invest in the best technology. And consequently, they don't make the profits to reinvest again. So they never get into that investment cycle. And, that's really the crux of it. If you can stay ahead on technology, you can keep up with these cost increases because typically your competitors are not in that playing field. So that's really at the crux of our strategy.
When you consider the demise of Velvet and the troubles that one time is in, what does it say about the capacity of this market to have more than 2 or 3, maybe more than 2, maybe more than one low-cost airline? Is it good for you now because there's more opportunity to put up price?
It does obviously help. I think same as any market, the reduction of competition is good for the individual player in the market, but not necessarily good for the market as a whole. Going back to that issue of creating enough profit to get into the investment cycle, I think having a big player like SAA and Mango in the market is ultimately what constrains airlines from even getting into that investment cycle. Because if you look at the likes of SAA or Mango, every time they need new aircraft, they simply go to government to either provide funding guarantees or the funding itself. So they're not actually making the profits to reinvest into that fleet. And the reason they're not making the profit is because they're charging airfares that aren't adequate. And that drags the entire industry down. So nobody makes enough profit to reinvest in the aircraft. So, that is the challenge for the entire market. And if you go back over the last 20-odd years since deregulation of the South African market, you see that to date, 9 out of the 11 private airlines that have started have failed. And it's just really a case of never actually getting to the point where they've been able to make sufficient profit to start that investment cycle.
Erik, just very briefly, in this new financial year, the little bit that you've seen so far, are you seeing a further improvement?
Certainly. I think the improvement that we saw towards the end of the last financial year is carrying through into the new year. We should see a lot more opportunity coming up with the new aircraft that we're employing. We've got the first one arrived in July. We've got another 2 arriving in October and November. And that will give Kalula an entire fleet of 737-800s. So for the coming year, we should still see a significant further reduction in fuel usage, a significant saving on maintenance costs. And then with the systems that we implemented, the new IT platform we implemented at the end of the year, that will deliver some big revenue opportunities in the coming year. So there's a lot that we've done in the past year that didn't actually have a chance to deliver in the 2012 year, but will be delivering benefits in the 2013 year.
Well, I hope those air hostesses that had to have a salary freeze get an increase this year, Erik. I'm holding thumbs for them.
Sure.
Erik,
everyone needs an increase.
Indeed. Thanks. Erik Venter, the CEO of Comair.